Welcome back to Investing Talk Podcast.
Today we're looking at Sellas Life Sciences.
As usual, before we start, subscribe, like, and comment to this video to support the show.
Yeah, please do. Your engagement really helps us grow this community.
And find other investors just like you.
Exactly. And honestly, today is a perfect example of why we do this. We're looking at a company that is essentially sitting on a powder keg of volatility.
That's one way to put it.
It's a clinical stage biopharma play, so, the stakes are already massive. But we're looking at a huge catalyst coming down the pike. It's the phase 3 REGAL trial for their cancer immunotherapy, GPS. I mean, this is the kind of setup that keeps growth investors awake at night. In a good way.
And it keeps investors like me awake at night in a very bad way. I mean, I see clinical stage, and all I see is a company burning cash with zero revenue.
That's the game, though, right? High risk, high reward.
Sure, but we need to be realistic about the floor before we start dreaming about the ceiling. So let's unpack the fundamentals first. And looking at the numbers on the page,
Yeah.
well, it is ugly. There's really no other way to say it.
Go on, get it out your system. Give us the bad news first.
Okay, so revenue. It's basically minimal, which I know is typical for this phase.
Right.
But the profit margins are negative. The price-to-earnings ratio is, get this, negative 13.07.
Which is what you'd expect when you're pouring every single available dollar into R&D.
Expected, yes, but painful to look at. No dividends, no buybacks. Free cash flow is just deeply negative. It's a cash-burning machine. And that brings me to this recent liquidity event. You call it oxygen, but I see it as dilution.
The $31 million in gross proceeds from the warrant exercises.
Right. And for you listening, this is a sticking point. Usually exercising warrants means more shares flood the market and your slice of the pie gets smaller.
That is the standard view, yeah. Warrants equal dilution, dilution equals bad.
So why is this a good thing in your view?
Because context is everything. In the biotech survival game, cash isn't just an asset, it's time, it's life.
So it buys them a calendar.
It buys them a runway. That $31 million, even with a low AI financial strength score, gets them through the key catalysts in 2026. Without that cash, the trial results wouldn't even matter.
Because they'd be insolvent.
Exactly. They get to flip the cards over now. The alternative was the game ending with the cards face down. A smaller slice of a valuable pie is better than 100% of nothing.
Okay, so they have the gas in the tank, but we need to talk about the car. What is the actual competitive moat here?
Yeah.
Because cash burns.
No, the moat isn't cash, it's the intellectual property. And this is where it gets really interesting. The headline grabber is GPS.
Galinpepimut-S.
Let's just stick to GPS.
Good idea.
It's a vaccine targeting Wilms tumor 1, or WT1, and it's in that critical phase 3 REGAL trial for acute myeloid leukemia, or AML.
No.
But the key nuance that people miss is that it's for maintenance.
Okay, maintenance. Can we define that for the non-doctors listening? Because I usually think of cancer drugs as something you take to kill the tumor when you're sick.
Great distinction. With AML, getting a patient into remission is actually pretty common. The problem is keeping them there. AML is notorious for coming back.
So the cancer sort of goes into hiding and then returns.
Exactly. And when it comes back, it's often more aggressive. Maintenance therapy is what you give a patient who is already in remission to teach their immune system to hunt down those hiding cells.
So it's the goalkeeper.
Precisely. It's the goalkeeper. And that is a huge area of unmet need. If GPS works, you're not just selling a drug, you're changing the standard of care.
Okay, that definitely raises the stakes. But they aren't a one-trick pony, right? What about this other asset, SLS009?
The CDK9 inhibitor.
Again, very lab coat.
Yeah.
What does a CDK9 inhibitor actually do?
Think of cancer cells as having an engine that drives them to grow like crazy. CDK9 is a key part of that engine's ignition. SLS009 effectively cuts the ignition.
So GPS prevents the return, and SLS009 treats it if it does return.
In a way, yeah. They presented phase 2 data at the ASH 2025 meeting that looked really good.
Yeah.
So you're not just buying a lottery ticket on one trial.
Okay, I see the science case, but a good drug doesn't always equal a good stock. Let's pivot to the charts to see how the market is actually pricing this.
And this is where this story gets really exciting. Or, terrifying, depending on your risk tolerance. The price action here is just screaming momentum.
Screaming is the right word for it.
I mean, look at the data. The stock is up over 141% this quarter. It's up nearly 175% yearly. We're seeing higher highs. The 52-week range is huge, from about 95 cents to over $5.
But let's zoom in. You paint a rosy picture. But year to date, we're actually down about 4.5%, and
Right.
there was a recent gap down of almost 3%. That tells me there's a lot of nausea for traders right now.
Nausea or opportunity. I mean, the momentum indicators, specifically the plus DI, are sitting at 27.73%.
All right?
That suggests bullish pressure is building under the surface. Despite that chop you mentioned, the underlying demand is pushing up.
Maybe. But you have to pay for that with stress. Look at the beta. We're seeing a beta between 2.25 and 2.63. For you at home, what does that mean?
It means the stock is on caffeine.
A lot of caffeine.
A beta of 1 means you move with the market. A beta of 2.6 means if the S&P sneezes, Sellas catches the flu.
And if the S&P has a good day?
Sellas throws a party. It works both ways. But you're taking on massive relative risk here. This is not a stock you buy and forget about. It moves fast and it moves hard.
And looking at the volume, it seems like a lot of people are noticing. The average is over 8 million shares. This is a crowded trade.
Definitely. Which brings us to the psychological side. The charts look hot, but let's see what the street is saying in the sentiment check.
Because this is where I'm seeing a major conflict, a real battleground.
It really is. On one side, you have the news cycle. There was a bearish article pointing to the high risks of that phase 3 Regal trial.
Right, the sell the news crowd. They see the history of biotech failures and they're saying, stay away.
And the ticker sentiment is neutral right now, which is surprisingly tepid for a stock that's run this much. People are nervous.
They don't want to get caught holding the bag.
But while the retail news is nervous, look at who is buying. You have to follow the smart money. BlackRock recently acquired a 5.4% stake.
That is significant.
It's huge. BlackRock doesn't just throw darts at a board. When they accumulate a position that big, it signals a level of institutional confidence that headlines might be missing.
That is a fair counterpoint.
Yeah.
And the analysts seem to agree with BlackRock, not the bearish articles.
Completely. We have a consensus of 3 buy ratings in US cells. Not a single analyst covering it is saying get out.
And the price targets are aggressive. The median is $7.
Yep.
So let's do the math. The stock is trading, what, between $2 and $3.50? A $7 target implies upside of anywhere from 97% to almost 250%.
Exactly. The street believes that if the data is good, the stock re-rates instantly. It doesn't crawl to $7, it gaps up to $7.
That upside sounds great, but we need to look at the cliff edge. Let's look at the risks, because if that data isn't good, that $7 target evaporates.
And that is the elephant in the room.
Risk number 1, the binary event. The phase 3 Regal trial. If you have a bad quarter in another industry, your stock drops 10%. In biotech, if your phase 3 trial fails, what happens?
You go to 0. Or, close to it. Historically, the loss rate post-sell signals when a trial like this fails is around 85%.
85%. So you keep 15 cents on the dollar. That is the wager here.
That's the worst case for sure.
And then there's risk number 2, the short float. This is flashing red for me. It's 29.49%.
Nearly a third of the float.
Exactly. Nearly a third of the available shares are being sold short. That means a huge chunk of the market is betting real money that this stock is going to crash.
Where it's a coiled spring.
And you always spin it to the positive.
Yeah.
How is 30% of the market betting against you a good thing?
Because of the mechanics of the trade. To close a short position, what do you have to do?
You have to buy the stock back.
Right. So you have 30% of the float that are guaranteed future buyers. If we get any positive news from the Regal trial, those shorts will panic.
They all rush for the exit at the same time.
The short squeeze. It's a crowded theater with one door. The price spikes, shorts are forced to buy to cover, which drives the price up even more. It compounds. That $7 target could be conservative if a squeeze triggers.
So you're saying the skepticism actually fuels the potential upside. The bears are piling up dry wood for a bonfire.
That's a good way to put it. The more people bet against it, the more explosive the move up is if they're wrong.
It's a dangerous game, but I see the logic. It's time for the final verdict.
I'm ready.
Where do you land on Sellas Life Sciences?
I'm awarding a bullish score of 7 out of 10.
7. That's reasonably high for something with this much risk. Walk us through the thesis.
Here's why. The upside to $7 is realistic if the Regal catalyst hits, and we're expecting that imminently, likely Q1 2026. The science on maintenance therapy for AML is solid, and frankly, the BlackRock stake provides a floor of legitimacy that makes me feel better about taking that risk.
And the timeline. Is this a long-term hold?
No, this is a swing trade. You're entering now, playing the catalyst over the next 3 months. If the news is good and FDA approvals follow, then you can convert it to a long-term hold. But for now, you're trading the event.
And what's the key date people should mark on their calendars?
Watch for the earnings and update expected around March 19, 2026. That's going to be the critical check-in point.
So buy the rumor, see if the news delivers.
Precisely, and keep your stop losses tight.
That's the thesis. If you enjoyed this analysis, make sure to subscribe, like, and comment below. We'll see you in the next one.